Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. US small caps are leading the way down as most all of the US equity indexes are now in bear market territory. When we take a look at the market decline, though, almost entirely from multiple compression. That is, valuations are being brought down, some of that due to that above average inflation. Earnings actually holding up thus far. Quarter two to come, we'll find out more just how much they're holding up. And finally, let's talk a little bit about housing. Mortgage rates are shot up dramatically. Refinances are very low. Housing prices still remaining steady. Let's unpack that a little bit. So as I talked about, US small caps, the riskiest part of the market, if you will, are down more than 30% from their peak that actually happened back during the late summer of last year, when they actually peaked several months ahead of the large cap S&P 500. You can look at that chart there on the bottom, the 32% drawdown by the small caps in the US. That's only the seventh time since 1980 that we've seen this type of volatility. So not a very common event. Now, if we look at the decline itself, prices have come down. Earnings themselves have not dramatically been hit at all. If you take a look at this chart in terms of earnings per share at 8.9%, and since the start of the year, you can see that the price of the S&P 500 down 23% as of the date of this chart a couple of days ago, and the price to earnings ratio is actually down 29%. So we're seeing that valuation compression where earnings have held up, but prices coming down. It's not a complete surprise. We've talked about this in the past, how when you have these above average inflation numbers with the CPI print still staying above that 8% level, that is putting pressure on equity market valuations. I think quarter two earnings are going to be very interesting to watch to see if we finally start to see some of the earnings contract. If you look back historically during bear markets, you typically see about a 30% drawdown in operating earnings during bear markets historically. We've yet to see any drawdown in that thus far. Now, in terms of housing, mortgage rates have jumped up. Refinances are slowing dramatically because of that. Take a look at this chart. Up top, we have the total existing home sales starting to decline here during the past couple months. Fourth straight month, in fact, down 3.4% in May. Down to a 5.4 million annual rate of existing home sales, noticeably slower. Part of that obviously related to that decline in consumer spending. Obviously, the big inflation in food and energy starting to cause people to slow down, especially when you combine that with the mortgage rates, how high they currently are relative to history. Now, supply is still very low. Take a look at the month supply of existing homes at just 2.6 months. Represent 2.6 months rather of the supply of the current sales price. So inventory has actually jumped 12.6% recently, but still very, very low. So you compare or combine rather low inventory with slowing housing prices, or I'm sorry, still low supply. Actually, prices are holding up pretty well still. You see the medium home price remains extremely elevated. We haven't seen this dip just yet, but we have seen the fast pace of growth in housing that had occurred during the past 12, 18 months post-pandemic with interest rates at rock bottom levels. That has started to slow, and it wouldn't surprise me if we start to see a continuation of this slowing over the next year. Now, always kind of end with a fun, interesting story. It's kind of a throwback, nothing new, but Teddy Roosevelt back in 1912, always kind of good to go back in history and look at. Maybe people were a little bit tougher back then. President who was going for a third term was out on the campaign trail in Milwaukee planning to do a speech. Coming out of the hotel, the gentleman comes out, fires a gun, shoots him, has his notes in his breast pocket. I believe it was about 50 pages of notes. The bullet went through his pocket watch. They believe it slowed down the bullet enough to where the bullet stayed inside of his body, and he obviously didn't die, but continued. Get up on stage, tells the crowd, everybody, please remain quiet. I've just been shot. but it takes more than this to kill, I believe he called himself a bull moose, and went on the speech for 84 minutes, right? Stopped a couple times to check to see if he was coughing up blood, finished the speech, ultimately went to the hospital, got treatment. And I'd say that's one heck of a day. So kudos to Teddy Roosevelt for the toughness to stick that out. I'm not sure I could have done that, and I don't think too many people could. So just more than 100 years ago, I think people were built a little bit different. But either way, let's go ahead and wrap this up, and I'll see everybody next time. And thanks for watching.